Good Friday morning. I wanted to take the opportunity this morning to discuss an additional significant headline that has come up regarding a company in the S&P 500, well, in this case, the Dow 30. Caterpillar, a heavy equipment company located very close to actually my home, the corporate headquarters, has announced a significant restructuring, some cost reductions, some staff reductions that will impact the company over the next few years. And I just wanted to take a look at the stock and the operating performance and talk a little bit about the company's actual statement released yesterday. And I want to start by saying, the stock dropped significantly yesterday, and typically in these situations, it isn't necessarily because a company has said we're going to restructure, that causes the cost to drop. What it actually, I think, caused this was the guidance outlook that the company gave. They stated that for 2015, total revenue would be $1 billion less than originally guided. That's about a 2% drop for Caterpillar. They also added that for 2016, revenue is expected to be 5% below 2015. Basically, that is a $2.5 billion drop. So you have the company announcing a significant decline in revenue past what they had expected. Therefore, they need to take steps on the cost side to not only protect capital and to keep the company profitable, but also to protect shareholders. And so there will be staffing labor reductions of between 4,000 and 5,000 salaried and management workforce between now and the end of 2016, and an additional staffing reduction related to the closure, or I guess consolidation, of approximately 20 facilities. And they said that this would impact about 10% of their manufacturing square footage. So some significant moves for Caterpillar, and I wanted to, my position on this in just a summary is I'm neutral on Caterpillar. If you're holding the stock now, I don't necessarily see a reason to get out. There are some people who are long-term, maybe cat retirees, who are holding significant portions of the stock, and one of the benefits they have of holding that is the dividend. The dividend at this point is right around 4.5%. Actually, it's almost 4.75%, and I don't see anything in the pipeline that shows that CAT is going to cut this dividend. They just announced a few months ago that they were increasing it from 70 cents a share to 77 cents a share. And in my opinion, as a result of that, they knew of these significant weaknesses when they voted on dividends. Not the new weaknesses we're talking about now, but that the market would be challenged over the next few years. So anybody holding the stock, especially people on fixed incomes, is going to get a 4.5% return through dividend payments. It's not guaranteed. However, like I said before, there isn't anything I'm seeing which would show that would be cut. I wanted to note as well earnings performance here. It's not the greatest, but it's also not the worst. In the last 7 quarters, CAT has met or beat earnings 6 times. Now, some of the reaction they've gotten from the market has been more on the guidance and the outlook standpoint than it has been on the actual performance of the earnings. But I wanted to note that the expectations set by analysts for Caterpillar earnings are actually very, very rational. And I'm going to talk a little bit more about the forward earnings here in just a minute. But I wanted to go down further here and talk about returns. And the fact of the matter is, they've been hurting a little bit over the past couple of years as a result of mining and now, in this case, the stronger dollar. Caterpillar exports their products. They're a big exporter. So a stronger dollar means that foreigners purchasing these exports are going to have to pay a higher price, and they're less willing to do that, especially in a weaker market. So that also precipitated some of the rough earnings estimates that Caterpillar came out with yesterday. I expect asset turnover to remain roughly the same. It actually may go up a little bit if they sell assets. They haven't indicated in their release that they were selling. They indicated consolidation. Return on equity has started to soften, but has bounced back in 2015. This will probably soften again towards the end of this year and into early next year. We will really see towards the end of next year whether these consolidation metrics have worked through the return on equity features and the return on invested capital. Invested capital, my calculation versus return on assets, incorporates the dividend. It gives me a good idea of where the dividend looks. And since the dividend's incorporated in here, you can see there hasn't been significant weakness on ROIC. So again, I'm confident that the dividend is going to hold. I want to look at trailing 12-month data and show people that despite this $2.5 billion annual cut in revenue, CAT's been down this road before. Trailing 12-month revenue in 2012 was over $65 billion, and now they're saying, well, and now it's 54, 52. So it's already gone down about $14 billion. So this additional revenue cut isn't anything new for them. And despite that, their cash flow hasn't weakened significantly. They've tempered their capital expenditures, which is expected and continued to be expected, and therefore they have a pretty solid free cash flow. So again, this is a company that is seeing weakness down the road. They're acting proactively. They're going to support their capital structure, and as a result, in my opinion, they're a good hold if you're holding the stock now. I personally am not going to get in and buy this stock. I want to take a trip down here to the forward earnings before I get off this video. I am on a tangent this morning. Forward earnings, I have a little model which looks at how the stock has traded in the last 52 weeks in terms of forward PE. And roughly around a 15.5% or 15.5% forward PE multiple is where CAT has sort of settled. It's been the mean of the last 52 weeks. And if you plug that in, you see that over the next couple of years, the price really doesn't move very much. So this is, again, why I'm neutral on this stock. You can hold it for the dividends if you're on a fixed income, but I'm not going to get in until I see some improvement in the forward earnings down the road, along with continued performance on the earnings side in terms of analyst estimates. So again, with mining, I don't know when the light at the end of the tunnel is going to come. With the dollar, I think it's not going to get here until the United States experiences its recession. Right now, our economy is doing very well compared to the rest of the world, and as a result, our dollar is going to continue to strengthen. That is all I have for Caterpillar. I want to wish everybody a great day and a great weekend.